Welcome to the ESG Investing Panel. I'm Jim Butcher, a Senior Investment Partner with the NEOM Investment Fund. Joining me on this panel are three distinguished CEOs. Ronald Hanley, CEO of State Street, on my left here. In New York, I have Adena Friedman, CEO of Nasdaq. And in London, joining us is David Schwimmer, the CEO of London Stock Exchange. So to kick off this discussion, I'm just curious, 2020 was a banner growth year for ESG investing. So I'd like to hear one or two thoughts from each of you on what you're expecting, let's put it that way, for 2021. Adena, do you want to start?
Great, thank you, and thanks very much for having me. It's an important topic because, as you said, ESG investing has really grown as a mainstream part of the investment thesis today, and I think that we'll hear a lot of that from Ron, who is one of the leading ESG investors. So, but as we look forward to 2021, I think there are two key themes. The first, of course, is the environment, and that continues to be the predominant theme that we've heard and we've experienced in terms of the rise of ESG investment dollars. And the second, though, is also the social side, and there's environmental, social, and governance. And I would say the social side related to some of the societal issues that have been laid bare as a result of the COVID crisis. I think that there are more investment strategies starting to be focused in on addressing those issues in the corporate environment, as well as, of course, governance in terms of diversity and inclusion as part of a corporate mission as well. So they're all important, but I think you'll see the most dollars in environment, second most in social, and continuation of a view into the governance side as well.
Thank you, Adena. Let's turn to Ron. What are your thoughts for 2021?
Well, first of all, thanks to everybody for pulling this off. I know it's been difficult to make this happen, and it's great that we're all together, even if it's virtually. What I would say, in following on from what Adena said, is that I think 2021 is going to be the year where the tide turns, in that up to now it's been a little bit of, you should do this, people exhorting others to do it. Going forward, certainly starting in 2021, this is all about investor demand. The investors want this. The investors want to invest. They recognize that it needs to be part of their investment risk framework. And what they're looking for is the measurement, the infrastructure, the projects, the products. So I think you'll go from a sense of maybe a few years ago that there's just not enough money interested in this to there's plenty of money interested in it. It's, are they the right projects? Are they the right investments? And is their impact actually being achieved?
Okay. Thank you, Ron. David, what are your thoughts for 2021?
Thanks, Jim, and it's great to be here virtually. Nice to see Ron and Adena as well. I think, as you said, Jim, 2020 was a big year for sustainable investing for ESG, and 2021 is lining up to be even bigger, with COP26 coming up in the fall, hosted here in the UK. I think a lot of opportunity for this to become an even more embedded and substantial trend. It feels in many ways fairly mainstream, certainly in the UK, certainly in the EU. And I think, to echo some of the remarks that Ron and Adena made, we are seeing growing ambition around the world to take more action to address climate change, to put more capital to work to address climate change. We're seeing it from market participants, we're seeing it from regulators, we're seeing it from politicians. And to Ron's point, we have that global investment demand. So we've seen the assets under management grow in each of the regions globally, in the Asia Pacific, in the US, and EMEA. One thing, maybe just statistically, I'll mention FTSE Russell, our index business, carries out an annual survey of asset owners globally on their index investments. And data from that suggests that we are well into the new normal here. This past year's survey, we had 139 pension and sovereign wealth funds. And of that group, over 70% have either already implemented or are currently evaluating ESG implementation across their index investment strategies. So, and that's up 14% over the prior year. So big impact last year. I think lots more to expect in this year ahead.
Thank you, David. You know, one thing you're kind of touching on, kind of maybe indirectly but related, is the data reporting side, which is obviously a critical piece. 2020 saw increased harmonization among some of the big players, the GRIs, the SASBs, Europe, as well, trying to get more comprehensive data reporting. Anybody want to just add to that, or what you're seeing? Is that fair? Is that going to continue in 2021?
I mean, it's probably the most asked questions by investors right now is when will the standards harmonize? Can we agree on specific standards? So that's the first question. And then the second question really is, and we get it a lot, I mean, if you think about our business, we're an investment manager, but we also service a lot of these investors too. Mm-hmm. And what they're looking for is performance. How do I know that I'm having an impact? How do I know? Because almost inherently, many of these investments are long-term, so quarterly return isn't going to tell you much. So how do I know that I'm having an impact? How do I think about measurement here? Is there help that can come from whether it's standards, whether it's accounting standards, et cetera? So it is the most asked question right now.
I bet. I can only imagine. David, in London, you're seeing this coming up with the European Union in terms of more comprehensive reporting, clarity of standards coming up. March, I think, is the first one. Any thoughts from the European side?
Sure. So you're absolutely right. The EU has put out a taxonomy on this and trying to take a leadership role, and I think that's very welcome. We've put out, FTSE Russell has put out a data model that's really aligned with the EU taxonomy, Green Revenues 2.0. The one other topic that I would just highlight is the IFRS Foundation's recent proposal to develop a global sustainability standard, which is really an opportunity to build on their own global governance and their links with security regulators. So I think that's one worth paying attention to as well. I think it's really important, again, similar comments to Ron, really important to achieve this kind of global consensus. There is so much focus on the disclosure standards, the different frameworks. It would be great to have alignment on a global framework and that kind of comparability of standards in a number of different jurisdictions. So, and that includes in Saudi Arabia. I think the IFRS approach may be the way to have that kind of global consolidation. Lots of work to be done in the area, though.
Thank you for that. I want to build on that a little bit. Basically, there is no global agreed upon standard for ESG. Now, we are harmonizing better in the last year, and hopefully that trend continues into 2021. But we're also seeing tremendous growth of ESG in Asia and China in particular. And China's already rumors, I guess, that they're going to create their own ESG taxonomy and standards. So the question to all of you, does it matter that we don't have the same ESG standard or different ones? I'm just curious. Adena, maybe I'll start with you.
Yeah, actually, to start by adding to the last question, I would tell you that when we look at this issue of ESG, we look at it both from the investment perspective and from the company's perspective. And I think this march towards standardization is important for the corporate community as it is for the investment community. There has been just a plethora of new standards put forth. There's also a lot of new, what we call rating agencies that have come into the market, and that has created a lot of confusion for corporates as they're trying to make sure that they're communicating all of the work they are doing, the metrics that they're supposed to be providing to investors in a uniform way when there isn't uniformity. So definitely the standardization, I think, is going to be welcomed by both the corporate community as well as the investment community, as long as those standards are created by both of those communities as well, so that they take into consideration some of the differences between industries, differences between geographies, as you point out, and also making sure that they're practical in terms of being able to provide them to the investment community successfully. So I think that you will see a move towards standardization, but coming to your point more directly on the emerging markets and some other parts of the world, I think there's also the need for investors to understand there can be these universal global standards, but there always should be at least a move into local elements of how the standards may or may not apply in a particular location, or at least acknowledging that certain countries or certain economies are moving towards making progress, but they may not be all the way towards a developed country. So I think those are the things where investors are going to have to accept hopefully some more harmonization, but still look at some of the local idiosyncrasies or differences in terms of making their investment decisions.
Thank you, Adena. Turning to Ron or David, do you want to add to that or have your own view on this?
Yeah, I think standards are important, and it will be good for us to see standards, but I also think this is an extraordinary opportunity for active management. And again, we're a large passive manager, so in some ways this is talking against our book, but if you think about the history of investing, when there's been, whether it's new geographies, new asset classes, it's actually that's when active managers, particularly those that brought real discipline to it, came in and actually made real money on behalf of their investors. And I think this is an opportunity for a lot more active management. I mean, if you think about it, you don't want a situation where everybody's driven into a portfolio that consists of the Teslas of the world and no energy companies. Sure. That actually doesn't make sense. And so it's active management, that kind of fundamental analysis that can help figure out which are the energy companies kind of most likely to succeed, working best towards a transition, because these things are long-term in nature. But to figure it out, even with great standards, is going to take a little bit more than what we're doing now.
Is it fair to say that even the investments in US and Europe, everybody's jumping in, let's put it that way. And so the more active approach might take into account some of the emerging market opportunities. Is that fair?
Well, I think for sure it would help in emerging markets, but I also think it's going to help in these industries that we may not like them now, but they're going to have to go through a transition. I mean, there is no light switch we can turn off and say we're going to be at 100% renewables, using energy as an example. So how do you think about how the transition is working at each of these energy companies, and where do I want to invest and where do I not want to invest?
Fair enough, yeah. David, do you want to add anything to this?
Completely agree with Ron in terms of the notion of having support for companies making the sustainable transition. And there is a lot of capital going into green companies, but we do also, of course, have to have the capital to support companies making the transition. One other topic I should just mention in the context of having comparable standards and really comparable standards for disclosure by corporate issuers. Last year, Mark Carney, the UN Special Envoy for Climate Action, and I wrote to stock exchanges around the world to ask them to join the UN Sustainable Stock Exchanges Initiative to develop common ESG disclosure standards. And Nasdaq is with Adena here on the panel. Of course, Nasdaq is involved in that. Shanghai Stock Exchange, many other global exchanges are involved in that, and that is another example at the what I'll call it at the issuance level, when companies are thinking about raising capital and going to market, that we have that kind of comparable disclosure. This is, of course, based, I should mention, on TCFD, the Task Force for Climate-Related Disclosures. So I think that's just another example of how the market is moving towards a standardization of disclosure standards.
No, thank you for that. I want to go back to what Adena said earlier on the social side. Historically, ESG has been really highly focused on the E, or the environmental portion of this. This last year, the S became increasingly important, partially driven by COVID, but also the issuance of social bonds. And I'm curious from all of you, any thoughts how important the social aspect of ESG investing may become? Is that in your mind, a continuing growth area in 2021?
I'll start. I think that that it needs to be. I mean, everything we're talking about here, and ESG really got going mostly around the governance, because that was something that's very visible. I mean, you could see that, okay, there's no women on the board. You know, the board looks everything alike. It was very, at some level, objective to measure. Climate is, and sustainability is a little bit in between, and then you get to environment is in between. And then you get to social, it's much harder to measure, but maybe is going to have the most lasting impact. So it's just something that we do need to think about. We need to think about what we're going to do to bring the right kind of measurement to it. because this all keeps coming back to measurement. How do you measure impact? There's no lack of investor demand. Investors recognize that over the long term, if you're not serving your employees, if you're not serving your communities, you're actually not going to be around for the long term. So the investors are there, but it's a little bit, how do I know that I'm having impact?
Right, fair enough. Adena or David, any thoughts?
Yeah, I'll build on Ron's point, and taking one of his other points, which is I do think on the social side it will become a bigger part of the investment thesis, particularly in the US, but probably everywhere. But it also, I think, does play more to active managers because of the fact that it is harder to measure. It's harder to put a number on social impact right now. And I think we will develop that. I think there'll probably be organizations that really focus on that, just as they have on the environmental side. But that's where I think engagement with management teams, making sure what they're saying is actually what they're doing, making sure that they're seeing those actions go into practice. And because there have been a lot of great statements made by the corporate community. And I think honestly, the corporate community has really stepped up on the back of some challenges we've experienced this year to take a stand and to be active in this role, in this issue. But making sure that those actions are followed through on is really going to end up being, I think, the work more of the active side more than the passive side early. And then as measurements start to be developed, then the passive managers can come in and put more, what I would say, indexing strategies behind that. That would be my guess on how the social side will develop.
Okay, thank you. David, any your thoughts from European perspective?
Sure. One other angle in terms of this, there was some speculation going into the pandemic last year and the global impact of that. There were a lot of questions as to whether that would have a negative impact on sustainable investing and the growth and focus on ESG. And I think what we've all seen over the past year is that, if anything, it has accelerated the trend towards sustainable investing. And as part of that, I think one impact that we will have from the changes in the world over the course of the pandemic is that there is a bit of a rethink or re-emphasis on how to think about the role of companies in this world, and in addition, how to apply the E and the S and the G to companies in this new world. So whether that is on inequality issues, whether that is, there's been some discussion about the fact that with governments really rescuing many companies in this kind of difficult economic situation, does, from an ESG perspective, do you have to take a different kind of look or put a different lens on how companies approach their tax strategies or their tax policies and where they're paying taxes? So I think that we will see more focus on and more evolution of certainly the S and the G in addition to the E as a result of the pandemic and a different kind of focus coming out of investors.
Thank you. Appreciate all your inputs on that. What I'm taking away, among other things from this conversation, is how important obviously the data reporting side is, and how do you measure the impact, not only from environment and governance and obviously the social side, but also increasing harmonization that's going on and that will need to continue at an even probably more rapid pace. But I'll ask this as a final question to all of you. What in your mind would accelerate, maybe not accelerate, what would be one to really move the needle forward in 2021 from your perspective for ESG investments? Adena, do you want to start?
I do think that we've kind of touched on the biggest issue, which is this idea of standardization. I think there are a lot of efforts underway, whether it's the World Economic Forum, as we pointed out, the UN. There are some concentrated efforts underway to really try to bring ESG standards and taxonomy into a more common state. I think that work will get done. I actually really believe that there's a lot of momentum behind that work right now. So 2021 could be the year where you really start to see that emerge. And I think that will have the best impact on giving investors a common way to evaluate and companies a common way to report their efforts and their progress. And I think that will be the best thing we can do for the future of ESG investing.
Great, thanks Adena. David, your thoughts. One thought for 2021.
One thought. I think enormous momentum in all of these areas. And with COP26 coming up in the fall, that really acts as an end goal and a catalyst to bring all of these different trends together. I think we're going to see a lot coming out of COP26.
Great.
I think that'll be a significant turning point for the movement in terms of sustainable investing.
Great. Thanks, David. And Ron?
Yeah, I'd agree with Adena and David, but what I would add is the U.S. back in the game,
Right.
and no longer being part of the problem, but trying to be part of the solution. It was going to be artificial without the U.S. there.
Great. As we're closing here, I just want to thank all the panelists. Really appreciate Adena and David and Ron for your thoughts, and it's been a pleasure to moderate this session. With that, I'd turn to the next session with Siba Adi is coming up, CEO of Saba Consultants. Thanks, everyone.